I, Jyoti Singh, extend a warm welcome to all of you to the 27th session of our webinar series Demystifying Sustainability Catalyzing Growth. Today's session is centered around a critical theme session on SBTi target setting and GHG mitigation. We are honored to have with us our esteemed speaker, Ms. Shahana Majumdar ji, and our moderator for today, CA Dhanji Bedaji and CA Manisha Rekhaji. Let us now begin. I would like to invite CA Bedaji to kindly take the session forward.
Uh, yeah, Thank you for the introduction. Good afternoon, everyone. So, I'll just give you the brief about the faculty. So, Suhana is an associate director with over 14 years of experience in sustainability reporting assurance, GHG accounting, and decarbonization strategy. With several years of experience in the field, she has a profound understanding of ESG reporting and rating frameworks such as GRI, BRSR, ESRS, SASB, CDP, UNGC, UN, SDGs, and DJSI. She has been extensively involved in delivering engagements across the manufacturing, oil, oil and gas, power, financial sector, e-commerce, real estate, hospitality, and IT sectors in India, Indonesia, UAE, and the Philippines. Yeah, thank you.
Shall we begin, Manisha?
Yes, please. Over to you, Shahana. You can start, please.
Thank you so much. So, hello
Thank you.
everyone. Um, good evening, everybody. I think it's 4. So, yeah, good evening. I'll just begin with the session. Thank you so much, ICI for inviting me, on this forum, and happy to deliver a session. Manisha, and other members request if there are any questions, because right now it's not visible on my screen. But then, if there are any questions, which are being raised in between, you may prompt me. I'll take a pause.
Sure, sure.
Um, yeah. So, this is the agenda for the day. In order to understand what is science-based target, or what is it that is net zero or GHG mitigation, it's also important to understand where does the problem lie, right? And what is it that we are working upon? And then, so I'll take you through, just give a very brief context. I understand that these may have been covered before, but then, a very slight context on that. And then understanding, the basic concepts of net zero, because that's where science-based targets come up to. What are these standards? What is the concept of net zero actually, and what these standards are about? How can you leverage on this standard for setting a science-based target, or for doing a net zero? And then, what is it that growing companies, or how can growing companies streamline their targets? What is it that is happening around? So I'll try to kind of, that's the agenda for the day. um, Coming to, as I mentioned, that what is the problem? Okay, so the problem is that, a basic, from a very layman perspective, that the earth is getting hotter. And because of that being the problem, we see, we have seen what has happened right now in Punjab. We have seen what is it that is, and these events, these climatic events, these are increasing day by day. All of this, we can also say that we as human beings are someone who are responsible. Since 1880, and then, since the Industrial Revolution, the global temperatures, they have increased by about 1 degree Celsius. 2023, 2024, these were the warmest years, since global records. Average CO2 emissions, these have doubled, over the last few years. And we, globally, we are on track towards, increasing the temperature to 2.7 degrees Celsius to 3 degrees Celsius of warming by 2100, which means, so the global trend, which says that we need to limit our emissions to 1.5 degrees. We have already, overshooted. we are reaching a tipping point, and that's the reason, that is the main reason behind all of these disasters which you see nowadays, and which is increasing and will keep on increasing. Now there's a very interesting concept of, although I'll try to make it a little relevant in terms of, the use that we do, the use of resources that happens. So we call, there's a concept called as Earth Overshoot Day. There's a forum globally who kind of, accounts for this Earth Overshoot Day. The sooner it is, like you see this one in 24th of July 2025 is the estimated day for the overshoot. The sooner it is, like for example, if it is in June or July, means we are exceeding, the consumption, then the Earth's capacity of regenerating the resources. So it's calculated based on, the grazing, the amount of grazing lands available, the crop lands available. So there's a formula to it. It's being calculated based on that. Previously, a few years ago, the overshoot days were in used to be in October, but right now, the Earth Overshoot Day is around, July 2025, which is again a matter of concern for all of us. Coming to, just laying emphasis, I understand that, you all have now, the grip, and all of you, about um, climate change as a subject, that is, because of the earth being warmed up, or because of the earth heating up. Climate change is like a global call for action. There's a Paris Agreement, which was signed up, and I'll take you through that, in a bit of time. But then, however, you see there are a lot of companies. Today's session, as we say, is on science based targets. So since science says that, we have moved up the ladder of increasing the earth's emission, therefore, when you apply the science and maths to it, you know that, you need to achieve a certain level of target as a sector. If you are in the oil and gas sector, or in the cement sector, what is the emission that a sector should limit itself to, and by which year? So based on that maths, which the global organization, IPCC, which they do, science based targets is something which is aligned to it. On the right hand side, you'll find companies who have, aligned to science based targets. This is taken from the SBTi report. Quite surprisingly, you will find that even financial institutions who are now, who have the ability to kind of, do an investment, fund companies, even they are kind of, moving, although the pace is quite slow, but now they have picked up in the last 2 3 years. Even they are, signing up to science based targets. Small or medium enterprises and companies were someone who had kind of, picked up before. Companies were anyways working on it, but even the small or medium sized companies, even they are, going and committing to certain targets and announcing it on public platforms and doing year on year reporting. This is about the Paris Agreement and, the nationally determined contributions. Now, the Paris Agreement, as you would all have seen in the news, it was adopted by around 196 parties at the United Nations, Climate Change Conference, which happens year on year. Now, this was a global accord, and it was done to keep global warming to not more than 1.5 degrees Celsius. And here, the target was to reduce the overall global emissions by 45% by 2030, and reach net zero by 2050. The idea here, in this case, was to limit the, emissions to 1.5 degrees Celsius above the pre-industrial levels. So that's the goal. Now, in order to achieve this goal, as you see, 196 parties or states, they had signed up to it. NDCs are nothing but the nationally determined contributions. And these are something which is at the heart of the Paris Agreement. Really important. Nations, they have taken certain targets. Even India as a nation has a target on renewable energy. They have a target. We have a target in terms of, reduction of the emissions. So there are targets or NDCs which each and every, company or each and every country has taken, and countrywide, nationally determined contributions are available on the, United Nations portal as well, which one can go back and refer to. Coming to, you know uh, why should companies measure their carbon footprint? You have seen that how to measure your carbon footprint, but then what are those reasons? Why should you measure? Because until and unless you measure, you monitor, you'll not be able to set a target. So the reasons for setting up those targets includes meeting the expectations of your key stakeholders. There's a pressure from the investor community. Employees nowadays, they want to work for organizations who have committed to such targets. We as customers, even we go out in the market and we search for products which are organic in nature. Is it organic? Is it doing something? Even you look at the packet of a chocolate and they would mention that it is sourced, the palm oil which has been used has been sourced sustainably, which means for sourcing palm oil there hasn't been any deforestation which has been caused. So in fact, even, and why do they do that? Because there's a push from the customer community. There are regulatory requirements. For example, in India it is BRSR who is asking you to report on your emissions, and it's also along with that there's a question that have you set targets on ESG. And there are rating agencies who are again behind the organizations, looking at the organization's data, and then looking at what are the precursors, and giving certain ratings in terms of strong, adequate, below average. So that's where the push is. There's a push in terms of reputation. There's a push for certain sectors who are importing goods to the European Union, because if from this year, from 2025 onwards, an organization needs to kind of report in terms of the goods that you're sending, or that you are exporting to the European Union. What is the carbon emission which is assigned with those goods? If you are complying with the EU limits, it's fine. If not, the importers from the EU region, they'll have to pay a certain tax, and if they are paying the tax, means it again impacts the suppliers from the India region. This mechanism is called as the carbon border adjustment mechanism. The certain things which we call as a transition risk for the organizations here in India, Asia, who are supplying their goods to the European Union. With US, we anyways are in a into a tariff war, and with the EU region, there's this carbon tax which is coming up from, and organizations will need to kind of who are importing from India or Asia, they'll need to pay a carbon tax, which is again a significant amount. One needs to pay tax based on per ton of certain products purchased, which includes iron, steel, cement. There are certain products wherein this carbon tax gets applied, and this is a part of the EU Green Deal in 2050. We'll discuss about it in a little more detail. Um, Coming to, I think this was also covered, but just a bit of a refresh, that we all will do accounting of the greenhouse gas emissions. But how is it that we do the accounting? We do the accounting with the help of the GHG protocol. There is another standard which is also called as the ISO 14064. Not very popular in India, because in India we use the greenhouse gas. But if you look at some of the regions outside India, especially the UK region, they are quite aligned to ISO 14064 as well. Recently, there has been an announcement that there's a merger of these two organizations happening, and very soon we'll see a new standard emerging up. But however, the details, I think, of GHG protocol prevails. There are a few things wherein organizations had raised concerns in terms of certain clarifications on boundary and all, and I think those things will get clarified when the new standard, or when these organizations merge together, and we see certain clarifications also coming out. We had discussed about the three scopes, but I'll just give a little bit of emphasis. Scope one is something which is direct emissions, which happens at the facility of the organization, by virtue of burning fuels at the organization site. Scope two is and kind of indirect emissions, which doesn't actually happen at the facility. It happens at at a power plant who is generating electricity and sending it to you by transmission. By virtue of using that electricity, there's emission which is happening again in the power plant. That's why we call it as indirect emissions. And in scope 2, scope 3, as you see in the picture here, is all other kind of indirect emissions. So emissions in the upstream of the value chain, which would be, from the purchase goods and services, the capital goods, fuel and energy, transport and distribution, waste from operations, the travel, the emissions that will happen from a business travel, from employee commute, from leased assets, and in the downstream as well, which happens due to transport and distribution, processing of sold products of the organization, end of life, waste related management, portfolio, based emissions, which is a part of the investment and the most critical category for a financial sector, and also franchisee based emissions. So these are, the essentially the categories of both the direct emission as well as the indirect emissions. Now moving on to the net zero part, which we also and what happens for achieving this net zero. Now the question arises that we call things like net zero, but there is a lot of dilemma around the subject matter as to what do you mean, do I need to zero down my emissions, what does it mean by net zero? So net zero is nothing but a set of a balance, I would say, wherein the emissions that is happening in the atmosphere is also being neutralized by capturing the same amount of emissions back. Now that since that capturing those emissions back is something which is again a big thing, that's why the emphasis is more in terms of reducing the amount of emissions that we are doing in the atmosphere. And quite surprisingly, most of these emissions are anthropogenic. By anthropogenic, I mean human, man-made kind of an emissions. So if you look at the left, there's a state of the current state is the state of an imbalance wherein the amount of emissions that we are making and the amount of removals, it's not simultaneous. We want to move towards the desired state wherein the anthropogenic GHG emissions, the way they are emitted and the removals which happen, because certain sectors are there which is, we call it as hard to abate sector. It's difficult to to make any kind of changes in those sectors. And there are technologies which are evolving up. For example, something like a mining sector, or say right now the thermal power sectors. There are these interesting questions which come up that if there's a thermal power plant, what is it that we do to kind of decarbonize the sector? There are energy efficiency plans, but the ultimately the thing is to move towards more renewable sources, rather than putting reliance on hard to abate sectors, or the way we are working currently. So that's the entire crux of SBTi, or that's the entire crux of net zero. Now coming to I spoke about Paris Agreement. I spoke about the NDCs. Now the fact is, by virtue of being driven and by virtue of conference of parties, which we call as COP, every year the meetings they happen, the conference of meetings of parties they happen, and organizations they have committed, or I would say countries or regions, they have committed to net zero. India has committed by 2070, and India, by virtue of being a developing country, that's the reason that we have committed by 2070, because the amount of labor which will go in terms of transition. Now, when I say transition, it is also important to understand that something which is already developed, or some region which is already developed, there are better nuances, there are better infrastructure, there are better facilities to kind of to do that kind of a transition. That concept is, by the way.
Shahana, sorry to
Yes.
interrupt you in between. The PPT is not moving.
One second.
Yeah, it's on the first page only.
One second.
Yeah, now it's moving. Yeah.
Moving. Sure.
Thank you.
So, yeah. So coming to net zero scenario across the globe, you know, say for example, various nations. I was talking about this, that various nations, they are setting up, targets on net zero. Now, say, for example, say. India as a nation, I was talking just about the just transition concept. Now, when I talk about just transition, it's more, to kind of to do with that the way we are transitioning, as you know, globally, we are saying that we'll move from hard to abate sector, from a thermal power plant. There'll be more reliance into something which is renewable. We'll invest more into green hydrogen. But however, when we are moving, with this space, how do we transform the entire economy or the entire society? There have been people whose, there are communities whose entire lives, and are dependent on the mining industry. There are regions, how do we do this just transition? This cannot happen, tomorrow, just because EU or the European Union has said that they will become net zero by 2050 doesn't mean that a country who is a developing economy has the right kind of an infrastructure to be able to become net zero by 2050. Therefore, India's target of net zero is by 2070. You can see other regions as well who have, kind of, and there are several regions. If you look at the numbers, around 138 countries, 217 regions, all of them, they have subscribed to net zero, and that's how even organizations, they are moving. And since the nation or the region has taken a target, that's why there's a pressure even on the corporates. It's being driven indirectly, and that's why there's a pressure on the corporates to also kind of go beyond, and set a target on net zero, although it's not a compliance requirement here yet in our country. We have been asked to kind of, drive and to and to set targets, but it's more or less driven by a competition point of view. So that's about it. Manisha, is my screen moving now?
Yeah, it's on net zero scenario right now.
Uh, is this the Science Based Target Initiative? Is it visible?
No.
Just a moment.
Yeah, now it's visible. Yeah. Yeah, now it's visible. Yeah.
Okay. Coming to, we just talked about net zero. Let me give a little bit of more emphasis on, what is meant by SBTi and how does it support, net zero. This is, by the way, the main subject matter for today. Now, what is the Science Based Targets Initiative? Now, it's basically a collaboration between the Carbon Disclosure Project, which is CDP, WWF, United Nations Global Compact, and WRI. It basically, so we call this as science based. And why is this a gold standard for the corporates, to come up with a climate target? It's good that we have right now only one standard across, who helps us align the targets. And what it means exactly is that, see, in order to achieve the target, or in order to limit the global warming to 1.5 degrees Celsius, it's important that one sets and achieves target in a science based manner, which is transparent. There's a year on year reporting. There's a commitment out there, and it's not any commitment. It's out one there on one dashboard, on which we call as SBTi's dashboard, which anybody can, can log in and see that, okay, if this is the corporate, this is adopted to science based target. It means if the target is validated by SBTi as an agency who is setting up a methodology which is aligned with that 1.5 degrees Celsius. And what does it mean when I say aligned? So it means that there is a science to emissions. Now, this 1.5 degrees Celsius increase that I mentioned, in order for this in order for us to be able to achieve this 1.5 degrees Celsius, there is a set of emissions which are defined, that, we cannot cross this is our border limit. We cannot cross this set of emissions. So in order to do that, it is more or less important that we adopt a certain pathway which says that, okay, for the cement sector, these are the emissions that you can do. This is only the emission that you can do. Rest is all residual. Please have a carbon capture system in place through which you capture the amount of CO2 emissions that you're doing currently, which is again hard to abate, and these are the residual emissions which are remaining. So that's the kind of approach which SBTi has taken. This is widely accepted. A lot of organizations, I'll just show you the numbers as well, that which are those numbers which these organizations have taken. And very soon I'll just take you through those numbers as well, that which are those organizations who have committed to it, what are the numbers that have been considered. Now coming to the climate target framework. Hope my screen is again visible, Manisha. uh,
Sorry?
I hope my screen is visible. Can you
Yeah, the
see
climate
the?
target framework is there.
Yeah.
Yep. Thank
So
you.
there are, these four key elements of the climate target framework, which are in line with the current, leading practice. We call it as one is the near-term science-based target. Now, what is it that we call as near term? Now, SBTi hasn't said that, okay, you as an organization, please become net zero by 2050. It has set year on year targets. And in order to achieve those year on year, they are SBTi is emphasizing that you set a target for a near term, which would be like a 5 to 10 year emission reduction pathway. A lot of organizations who have, if you go back and if you log in to the science based target dashboard of the website, you will see a lot of them have set targets till 2030, 2033, or say 2035 till now, in order to reduce something around say 40% or 47% of their emissions around by around that time. And then there's this long term target, which is still again which is still 2050. Long term target validation currently doesn't exist. What exists is the near term science based target, which you set up, because for near term you'll have to also, although you do not submit it to SBTi, but internally when you are setting a science based target, you also evaluate what are those, because net zero requires investments. Science based targets is something which will require investment from a corporate. So you set up what is your growth plan, what is your expansion plan vis-a-vis what will be your emissions and what will be your targets, and accordingly you have your capexes and opexes measured, presented to the board, validated. So those are the near term SBTs. Long term is something which is long term. No one is sure of the technologies which are going to evolve, because technology is brimming up quite fast, especially with the automation there being there in place. So long term is long term, although you can set a target, but you cannot have actions quite defined when it comes to long term, because those will keep changing. You can have, obviously, but those are something which will keep changing. Post that, once you do a near term and a long term, there are certain emissions which will remain. So the right hand side, if you look at the graph, you'll find these bars which you see on the screen. These are the abatement which are happening within the abatement of emissions. If you see there's a decline, this is the abatement which will happen within the value chain. You'll also see certain abatement which is happening beyond the value chain below. And these happen by way of say your carbon offsets. There are also removals which you see, when you say removals, it is having something say like a carbon capture mechanism in place to go forward with removals. When we say net zero emissions, it's basically, you see this star and it's called as net zero emissions. So this is the year, basically this is a trajectory for an organization, and this is the year when the organization they achieve their net zero. Okay, so if we say net zero by 2050, which is essentially the year which a lot of organizations are subscribing to, they say that 2040, between 2040 to 2050, there is some year which they subscribe for a net zero target achievement. So assume that this is that year. After that, whatever you see in the orange color is basically a residual part of the emission which will remain. That residual part is something which the organization cannot do away with, and that emission is bound to happen. Now, the limit of that has been set in SBTi is around 5 to 10%, and an organization can have their offsets in place. So these are, the orange bars here below. These are the offsets, because for that residual part, for that 5 to 10% part which remains, is something which is called as a residual emission, and you can have offsets in place to be able to kind of, and offsets can be in form of those are also being defined. Offsets can be in form of your afforestation things, related to investment on, on your landfill, solid waste landfill. There are certain other projects which are being defined as carbon offsets, wherein one can invest and, act on the residual part of the emissions. The fourth part, which is again a very recent part, which has been disclosed, or it's a standard which has been developed last year, or I would say last to last year, which is called as beyond value chain mitigation. Now, one is your scope one is your scope two, another one is scope three. Now, here, which you find, this fourth part, the one in the gray color, is something which is called as beyond value chain mitigation, which means that you have addressed your one, two, and three emissions, or you're addressing those. And in order to make this climate change faster, you as a corporate, as a part of being a responsible, or as a part of your responsible corporate citizenship, you take additional actions to kind of, mitigate certain emissions which is beyond your value chain. So that is basically, the part 4, which is again a new standard, and it's a part of corporate responsibility. There is no standard on SBTi which asks you to set any target on beyond value chain mitigation, but however, it's a standard which has come up, and certain organizations, they are looking forward to do certain investments in terms of beyond value chain mitigation. So this is about, the climate related targets. Coming up to, the four types of carbon commitments or targets. One is carbon neutral. Now, this is to explain that one is SBTi as a standard, but then how are organizations going to achieve? Because there's a lot of pressure. I mean, pressure from peers, pressure from regulators, that, or say pressures from, pressure from standard setters, wherein there is a lot of demand to kind of, be that organization and be there in the cadre, whereas wherein your emissions are absolutely neutralized. So in order to have that branding in place, I would say an organization decides that, okay, if I'm starting with, how can I call myself as an organization who is carbon neutral absolutely in the first year? So therefore, they become carbon neutral for their scope 1 and 2 emissions. It's easy to do that. You invest in the offsets. I spoke about afforestation. So you invest in certain offsets which are available, right now, there in the market. There are certain, carbon credits that you can purchase from Gold Standard, from Vera. Those are very high quality offsets, and you can become a carbon neutral organization. It's more from that branding perspective, wherein you are not reducing your emissions directly, but however, you are investing on someone who is preparing, or who is investing on a project which is leading to certain carbon capture from the nature, and that's how you become a carbon neutral organization. Second pathway, second kind of commitment is basically the science based target commitment, wherein no offsets are being utilized for reduction, but however, there's more focus on energy related efficiency, on the abatement measures, and there is a year on year target achievement, which is basically called a science based target. Another one is a science based target plus net zero by a certain target date. So science based target essentially now also has a component on net zero, thankfully. So for organizations, they can submit their targets for near term target validation. Also, there is an option to get your targets validated for net zero within the SBTi itself. So there are two ways in which you can get your targets validated. Um One is, and the fourth way is, as I mentioned, as you have seen all the three kind of carbon commitments or targets here. So the fourth way is to become carbon neutral now, that if organization is setting a target and there's a lot of pressure because of that branding reputation part, they want to become carbon neutral now, and then also kind of set a science based target and a net zero by a target date. So all the three happen together with certain set of timelines or commitments. So that's how the four kind of carbon commitment works. Coming to the kind of SBTi guidance which is available for setting those targets. Now SBTi, although it says that you need to set a target, SBTi has all the the website itself has a lot of tools which one can access to, and add the emissions of the baseline year. Baseline year is the year which you consider, which is quite latest, which has the inventory of all the emissions currently, the consolidated boundary which is available, and that's how you go ahead and set your standards. There are sectoral net zero standards, wherein there are for all the key sectors, I would say the standards are apparently out. Things like your apparel and footwear, automotive, buildings, chemicals, cement, maritime. These are certain sectoral net zero standards which are already out. If an organization from these sectors, if they are looking forward to setting a decarbonization approach, they cannot look into something which is like a common standard and set their targets. They will have to approach and look into the sector specific standards which are now available at this SBTi document. And when I say sector standards, they essentially have categorized. For example, if you're looking into scope 3, there are so many categories. Now if you are a sector into buildings, for example, if I am doing, say, for a hospitality, setting targets for a hospitality sector, that also falls in the building criteria. And whatever scope 3 categories or whatever approach is mentioned in the building standard, I'll have to, as an organization, abide by that, look at the thresholds mentioned there, and accordingly set my standards. So this is the first guidance. The second guidance which is there is on corporate net zero standards. So the SBTi has a common, it's a corporate net zero standard. A lot of organizations, they're looking forward to it. It's applicable to all the organizations, while some of the SMEs, for some of the SMEs and MSMEs, if they are also looking forward to setting up a corporate net zero standard, there is some relaxation given in terms of setting their scope 3 emissions. If the organization doesn't fall under a certain threshold of, say, having 500 employees, they can look forward to doing away with the scope 3 emissions. They can go ahead and do a set a net zero target as per their scope 1 and 2. That's for the corporate net zero standards. Now, recently in July 2025, the financial institutions net zero standards are out, which SBTi, it was something which was long, awaited. And SBTi is putting a lot of emphasis for, the banks, the asset managers, the insurers, and the other financial actors to set their targets based on the the financial institutions net zero standards, because the fact is that it doesn't it also considers the emissions which for a financial sector, it's not their scope 1 and 2, but it's however the category 15, or I would say the PCAF emissions, which is more important. It's important to to set targets based on that, because portfolio emissions would account the major criteria of emissions for them. And by way of this, by way of the financial institutions setting the net zero standard, they are trying to, SBTi is trying to push the financial institutions to kind of stop funding the coal sector, the oil and gas sectors. The idea is to kind of put a push on them so that they have a target, that by so and so target I will be doing away with these hard to abate sectors. So that's the idea. That's why there's a lot of push from the SBTi and from other regulators also to look into the portfolio emissions. In India also, by the way, the RBI, they came up with a, although that paper is still, going to be out, there was a draft paper on doing climate related risk assessments of the portfolios, that these banks or these financial institutions are holding. Although that's yet to be out, but then there's a launch of of a website wherein it's still under development, but then the idea is that you're able to understand that what are those portfolios and what are the risks associated, what are the ESG related risks associated with those sectors, so that banks, they have a vision, before they move into, or before they venture out into such sectors. Another one, the fourth one that I mentioned, on beyond value chain mitigation, as I again said that, and the core idea of coming out with a beyond value chain mitigation is that, the idea is that the investments, as I mentioned, in the beginning, as I spoke about certain, investments being done by the firms, the corporates, on limiting the emission to 1.5 degrees Celsius doesn't seem to be enough for us. It doesn't look evident and enough for us to be able to achieve the target of 1.5 degrees Celsius. I mean, limiting ourselves, our temperatures to 1.5 degrees Celsius. And that's the reason that we are looking at, beyond value chain mitigation. Trillions of dollars are still required, to achieve 1.5 degrees. And that's why a separate standard on beyond value chain mitigation, although not very popular yet, but SBTi is making a lot of efforts to make this, standard also popular. So, coming to, companies from across the world, this is just, just to kind of showcase that how have organizations moved, on the SBTi trend tracker. If you look at the current database, then more than 11,000 companies who contribute to around 37 to 40% of the global market capitalization right now, they have, either validated or they have committed to the science-based targets. Around 8,955 companies, they have their targets validated by SBTi. And if you look at, companies who are going ahead with a near term target and a net zero target validated, there is a surge, in that percentage, around 227%, I would say, in just 18 months, in less than 18 months. That's how popular this standard is becoming. It has taken, there's a huge surge in the last 2 years, if you see, which shows that, how much driven is this standard, or how much driven are corporates, by their stakeholders. So these are certain numbers which may be of interest to you. And if you look at geographically the way we are positioned, India is also amongst, the sixth, or I think the seventh largest region, with corporates who are kind of, who are brimming up. I think around more than 120 or 127 corporates right now in the SBTi tracker. They have, for the corporates in India, they have subscribed to science-based targets, and they have gotten their targets validated. So that's how the figure looks like. And if you look at, the trend, this is led by China. There is an increase in companies in China, which is quite surprising, with the targets. And then we see a similar momentum in Thailand, Japan, Taiwan, Hong Kong, and Korea. When it comes to, interestingly, when you look at the sector leadership, that across sectors, how are corporates taking this up? So very interestingly, if you look at consumer discretionary, material sectors, industrials, they are brimming up, because this is something which is more required by the power sector, by the utility sector, by the hard to abate sector. Quite surprisingly, you will even find that the ITES sector is also someone who is leading the agenda by setting targets. Also because of the fact that they're also being driven by the peer pressure, but also because of AI coming up and data centers consuming so much amount of data. There is a way to consolidate those data centers to be able to achieve that level, and achieve their targets on time. So that's a little bit about I just wanted to portray and share the numbers, that how our company is moving up the ladder across the globe, and particularly in India. um, Coming to now, the target setting process, that how does the target setting process look like. And then after signing the commitment, how much time do companies have, how to kind of set the commitment. So it's a robust process, and I would say it's a robust and a rigorous process that ensures credibility in setting targets. So one needs to commit to SBTi first. I'll also share the commitment process with you, in due course of time. So one needs to kind of commit to the SBTi commitment. There's a standard commitment letter. I'll take you through that in some bit of time. All that is available in the on the website, as a tool. And you need to submit it via an email. You'll get a confirmation that yes, we are registering you. The organization's name will appear on the SBTi's website, and the corporate will be tagged that committed. But and then you internally, you have 24 months of time which SBTi has given in order to develop those targets in line with the science based criteria. Now when I say develop your targets, this doesn't mean that essentially you have a year on year action plan, and you need to develop it. The idea is to develop or have an action plan in place to be able to justify that if you are going to reduce 15% emission in the following year, or say 20-25%, what are the actions that an organization is going to take in order to reduce it. But internally, before committing, organizations or the board specifically, they try to understand what are the investments which would be required to develop these targets. And then you submit a completed submission form to SBTi, and that has to be within that period of 24 months. Sooner the better, because even the validation takes close to 2 to 3 months, because of the to and fro that happens with SBTi. There are questions on boundary, there are questions on certain factors which you have considered or not. So the idea of SBTi doesn't lay too much emphasis on the actions or how will you achieve. The focus is on the inventorization. How have you selected the baseline? What are the factors that you have considered for setting up your targets? Is it aligned with the SBTi, or the IPCC protocol or the tools? These are certain things which goes into, and that's how you submit. And then once your targets are validated, it's a communication that SBTi will publish that your targets are approved. And on the dashboard that I mentioned, you'll go and see that your corporate's name, as well as the one which was committed, which looked like committed before, is now looking like it will show it as targets validated. And then you can disclose your annual year on year progress via the organization's ESG report, or there can be a communication planner or a charter on science based targets separately. Generally the trend is that organizations, they publish it by way of communicating this thing year on year. So that's how the disclosure happens. And if the organization fails to report this target before 24 months, it shows as commitment removed on the SBTi dashboard. Okay, so coming to SBTi, this is how it looks like, the SBTi account creation. There are, as I was explaining, that you set in, you log in, you create an account, your organization's account, and you set your targets, followed by you commit to the SBTi. This is how the commitment letter looks like. And once you fill in all the details, you have to select your target commitment, that whether are you going ahead with a near term target submission or a net zero target submission. The spock name, signature. This is how the commitment letter looks like. This has to be signed by the head of the organization, preferably the CEO, and then, because this is a commitment from the organization's end, and then you submit this to the to the SBTi website. Uh, Coming to the benefits of the SBTi registration. Now, when I talk about benefits of SBTi registration, there is an enhanced brand reputation. Because everyone in the ladder is kind of, or your all of your peers would be going ahead and reporting. So it's important. It gives that brand reputation. There is investor confidence because of the year on year reporting, because when you report, you also get the data assured. There is a, although right now there is no regulations to per se with SBTi, but as I mentioned before, the European Union, because of the European Union Green Deal, they were quite advanced. Even India is quite advanced that way. As a country, we are quite proud. We were the ones who came up with the concept of BRSR first, and then European Union's CSRD came later. We were quite advanced in that journey, and as a nation, we have also, we were the only ones. India is the one who came up with the concept of reasonable assurance. However, as of now, because of some corporates coming up and saying that we are not that mature when it comes to non-financial data reporting. Therefore, the idea is, and from the perspective of ease of business, kind of leeway has been given, that it can be assurance or an assessment, or a limited assurance. That's up to the organization. BRSR or SEBI will come up with more details on that. But then, however, if you are kind of setting your targets, things like a CBAM, or a carbon tax, you reduce your risk numbers, from that regulatory angle, I would say. For this, what we have also seen, that when I do decarbonization projects or organizations, one is definitely that this requires an investment. But when we calculate the return on investments, from these, we see that there is a, practically we have seen, based on the numbers, that there is a benefit that the organization gets when they go forward with installing group captives, when it comes to renewable energy. When they look at having PPAs in place, there is a significant amount of benefit which the organization gets. There is a competitive advantage for the organizations, because they can differentiate themselves, in the industry. And of course, addressing the climate risks through SBTi, taking one step at a time. It helps to future proof your business, looking at the current business scenario and the way things are changing, every now and then. Coming to certain services and certain important clauses, of SBTi, certain criteria and recommendations for the near term, as well as the net zero targets. Now, see, from a boundary perspective, now all of you might be aware that BRSR says that you can either select a standalone boundary or a consolidated boundary. However, SBTi specifically says that while submitting your targets, you should submit targets only at the parent or at the group level, not at the subsidiary level. In fact, when SBTi team members, when they run a validation, post the target submission, certain important things which I also mentioned before, which they take care of, is basically, are the emissions reported at a consolidated level? What is the way in which you have consolidated your boundary? Have you left something apart? Is there anything which is left? Have you not considered a category in scope 3? These are all questions, which are being asked. Coming to, so it's very clear that the boundary has to be at the parent level or at the group level. Coming to the scope coverage, the targets, for scope 1 and scope 2, for the near term it is okay to leave 5% of the total combined scope 1 and scope 2 emissions from either the boundary of your GHG inventory or your target boundary. So 95% of the emissions that you have should be a part of your target boundary. You have to have a target on the 95% of the emissions of your inventory, which means that a lot of organizations have these queries that can I just do show an inventorization of 95% and set targets? No. You will have to do an inventorization of showing 100% of your emissions, and then consider 95% within the target boundary. That's how we submit targets to SBTi. In the near term, now near term is again, I would say 5 to 10 years. uh, for the near term right now I'll be speaking. So here in this particular case, um, if your organization, if the companies, first of all, scope 3 emissions, if they are 40% or more of the total scope 1, 2 and 3, then the scope 3 emissions will be a part of your will be included in the near term science based targets. So that's the case that even in order to evaluate, there are certain sectors, a very few, of course, if you see, and if you evaluate scope 1 and scope 2 vis-a-vis a scope 3, you'll always find that scope 3 is always at the higher side. But however, if you look at certain sectors, for example, say the cement sector, scope 3 accounts for around 8% of the emissions within the cement sector, because maximum is lying within scope 1 and 2. So there are certain very few sectors wherein scope 3 is not that evident. In that particular case, if it is 40% or more of total 1, 2 and 3, you consider scope 3 in the science based targets, or otherwise you leave it. Now coming to emissions coverage within the target. So this is also again a very important point to ponder upon. In the near term category, your target boundary. Now again, I'm sticking. I'm trying to limit myself to the target boundary. So 67% of the total scope 3 which has been reported has to be a part of the near term target, and 90% of the scope 3 emissions has to be considered in the long term science based target. So that's how the entire SBTi framework is designed. There are certain leeway that I shared in terms of scope 3, that is the SMEs. They don't need to, if they fall under the SME criteria as detailed by SBTi, they need not set up a size scope 3 target. If 40% or more, only then you go ahead with the scope 3 target submission. 67% of total scope 3 has to be considered in the target coverage for near term, and 90% for long term. So that's how it is. There are certain, not much is given as a part of an exclusion when it comes to scope 3, because SBTi is also very well aligned with the GHG protocol. To say though, so everything in SBTi, if you're going through the standard, you will see they are referring back to the greenhouse gas protocol. So the better an organization prepares its GHG inventory, the better it is to manage or to mitigate, or to set SBTi targets, I would say. The better it is. So there are certain adjustments and certain scope 3, obviously when you do an inventorization in your training, obviously it would have been covered. Certain set of assumptions are allowed based on the GHG protocol. Others need to be exactly accurate. Coming to I think I've covered this in bit of detail, but then would also kind of lay a little bit more emphasis in terms of how active commitments. So till 24 months your commitments are active. If only when if your validation is continued till a certain more period than 24 months, like till one more month, there are certain queries which you have received and it is at the SBTi's end. Your commitment is still valid. Once it is set, it's mentioned as target validated and target set. For the expired commitments, if the commitment is withdrawn by the corporate, it's called as targets withdrawn. Or if the company ceases to exist, merges, or the parent company submits a target, then it shows as commitment removed. So that's how the process of SBTi is. Coming to how corporates or how companies can streamline their net zero targets. So now I'll be covering mostly the mitigation part of it. So basically, if you can see this, the path to net zero. Now I've covered a part of science based targets, and I've put some emphasis in terms of how as a corporate can you plan, or how as a corporate would you want to go ahead and submit your science based targets. Coming to the path to net zero and how companies can achieve it, there are now there are certain ways. As you see this graph, it's quite easy to follow. You see this phase in of carbon reduction strategies. So it's said that when you are beginning in the journey, the idea is to kind of to invest more into energy efficiency improvements and into low carbon technologies. So how do you do that, when you talk about carbon reduction? So when I talk about energy efficiency, there are projects which an organization can look at related to HVAC, which is again something which considers, which caters, or which takes up a lot of consumes a lot of energy. So one is your HVAC system. Another a lot of other things are there in picture, wherein if you install those equipments, your energy efficiency increases, your overall your energy goes down, your consumption basically reduces. The second part that you see when you're reducing in this journey, like and this is how corporates who began in their journey. So this graph is something which has been made with the sense of because you see it's from 2020, and it starts something which is beyond 2020. Consider Microsoft as an organization who started quite initial in the journey way back in 2007, which was considered as a baseline year at that particular time. They by the way, they have a target of becoming carbon negative in 2030. I think one of the most advanced organizations who is looking forward to it to become carbon negative, which means that they'll capture all the emissions which they have emitted till now in the atmosphere by way of investing more in such technologies. So here, coming to this, which we call as pursuit of low carbon innovations. So here, the idea is to kind of in terms of green economy, you adopt more, or you invest more on renewable energy. You have one is doing an investment or having a capex in place at the site, but however, due to lack of space, it's not always possible to install renewables at the site. Instead, you invest in the or instead you look into PPAs. You look into installing group captives, so that somehow your renewable energy quotient is being met. You can also kind of invest into certain technologies, and then calculate the ROIs, that how efficient will that technology be, how can you reduce those emissions. The last part of that being is into incorporating carbon offsets, which means that you invest into some natural solutions. You invest into you participate in carbon markets. You purchase offsets which are good in quality, which have been registered with Vera or with Gold Standard. Now, why I say good quality? These are certain credible, places wherein good quality offset, because it goes through a lot of verification and validation on site, and that's how the reduction in the tonnage of emissions is also specified there, project wise. So you invest there in terms of per ton of emissions that you're doing. However, from from an offset perspective, SBTi is not something which tells you to kind of do a carbon offset. It says that, do a carbon offset towards the end. Once you have tried everything, there are only residual emissions which are remaining, and you do a carbon offset. The idea is to invest more into energy efficiency, into green growth businesses. That's the basic idea and the nuance over here. Coming to, that how does it get implemented, or how are corporates looking into net zero, and how are they implementing it? Because the actions or the mitigation plans, they look quite robust. So it's always driven from the top. Net zero is not something which a site can implement on its own. It's always driven from the top. There has to be a board oversight. Organizations who have set such targets gets their they get their mitigation plans reviewed. The capexes and the opexes which would be required at this level, they get it reviewed and adopted by the board level. Below the board level, there is the below the apex committee and the board level, there is an execution committee, a sustainability committee, who is responsible and accountable for the oversight, and for delivering on such projects, over the long run. Then there are these clear, reporting structures. There are these clear review structures, and the company is quite transparent about their actions, in the public domain. And they document and they mention about their progress, by way of coming out with a year on year communication, by way of their sustainability report or an integrated report. And then you also have your one of the key measures of achieving net zero for hard to abate sectors is that the action plans which are taken at the corporate level, as well as at the site level, is also being aligned to certain incentive plans, on the net zero KPIs. That's how the agenda is being driven across throughout. Coming to how are companies implementing net zero measures, a little bit more emphasis in terms of the entire journey, which I would want to mention here, is that first of all, you set your emission baselines and your science based targets, the targets for near term, for long term, as well as for the residual emissions. When I say improving energy efficiency, as I mentioned, one about the HVAC system, there are other measures as well, very small measures which are required in terms of energy efficiency, however, which gives long term gain. The only challenge here is that a lot of corporates, they believe that or a lot of organizations, they believe that by investing into energy efficiency, the returns right now might not look too lucrative. But believe me, when we do this across organizations, we have seen them documenting that, by just by changing the HVAC system, or by changing by making certain changes in the organizations, or in the, say, the back filters, the electrostatic precipitators, or making these changes in the energy part, how much of benefit has it given to the organization in terms of saving their cost? So that is one. Third is, which is, I would say, easy for some of the regions right now in India, wherein a green power facility, a premium power facility is also there. Region wise, you need to pay a certain amount of a premium and you get green power. Another way is to kind of go ahead and do a PPA. Generally, some of the organizations, they enter into long term PPAs, and that's how, you can enter into renewable power, although not feasible across India, I would say, because of the policies. But the policies are also evolving now, a lot, and we have seen some of the organizations working a lot on their scope 2 emissions. They're switching to renewables, either on site or off site via PPAs. On site is a little bit challenging when it comes to such urban sectors due to space demand, but these policies which the government has in terms of renewable power is something which is helping. Although I won't say that there's a huge or a large picture, but then still there's a lot of support, I would say, in this direction in order to increase the renewable energy quotient. Another one here which you see is to innovate. When I say innovate, you all, I don't know if you would have come across the concept of, say, for example, green steel. This is something which has emerged, right now, which means that the amount of emissions which is happening for making that steel is almost around, reduced to 95%. So steel being a hard to abate sector, one fourth of the emissions is being reduced by way of doing green steel. One of the plants have come up in the Raigad, region in India. It's expanding also, wherein this is being adopted. EU is not emphasizing too much, but however, it's promoting that you also look forward to green steel, because that also kind of caters to steel is something which is very common. That is also something which will cater to also recyclability of steel, because for the one of the criteria for green steel is also recyclability. So therefore, you innovate into your products, you innovate into the processes and the services, so the emission quantum reduces. One major chunk of emissions which we see and which is very difficult for the organizations to manage is to engage with the suppliers and the value chain partners, because some of them, they are so small, they work with certain aggregators, some may be SMEs and MSMEs. So idea is to kind of collaborate, engage with them, do certain meets, so that they are also able to come up to that level, sign up to SBTi, or at least understand that commitment. And and there are organizations who have been able to achieve that. For example, I was talking about Microsoft. Even they have very specific requirements laid for the suppliers that they want to partner with. However, for small organizations, it's important to at least engage or start at one level rather than not start at all. So that's also something which is important. Then towards the end, it's also important to, although not very popular as a concept, but this is also important, because we are also talking about removal of carbon dioxide from the atmosphere, or the removal of carbon from the atmosphere. Therefore, in order to neutralize something which is unavoidable or residual emissions, we are also looking forward to investing in the carbon offsets. There are a lot of projects which are registered on platforms such as Gold Standard, Vera, wherein organizations can go. These are quite credible as well, wherein you can go and register and gain those benefits of purchasing offsets. And last but not the least, I'm just to share a case study of an organization here, wherein uh, there is this and it's because why I'm mentioning this is IT sector industries, if you see, they have they all, almost a lot of them, they have set their science based targets, quite surprisingly, because one thing is peer pressure, other thing is also it's easy to achieve for a sector like the ITES industry. However, right now, because of the surge in AI, the demand on data centers, and the amount of investments required for green data centers, the concept which is popularizing of late, it's difficult for such organizations as well to reduce their scope 1 and 2 emissions. Here I'm just giving in organizations layout. If you see here, the scope 3 emission of this organization is quite high, which is 91% of the total emissions. And they took certain measures, they invested heavily in terms of scope 2 emissions, they have reduced it considerably. Even though it is 8.4%, they have taken certain initiatives in terms of reducing it. The organization Teradata, they have reduced they have looked into energy intensive building systems. They have consolidated the data centers together. That's how they have been able to reduce the emissions, the scope 2 part, because they have built up some efficiency around that. Work from home has been a policy there, because it's an ITES industry. They may work from home does do wonders for such an industry. They have invested heavily into renewable energy certifications, into power purchasing agreements in order to abate that. They have a target, that they'll also become scope 1 and scope 2 is something wherein they have reduced around 37 to 40% of their emissions by now, and they plan to be net zero by 2050. Now this is the hardest struggle which you fear, which you see, that organizations, they will be able to say that they will reduce their own emissions, such sectors by 2030. But something which is quite again difficult to achieve or to abate is scope 3 emissions, which again we call it as as indirect emissions, I would say. And it's difficult to achieve, as I mentioned about Microsoft also. Since they started quite initially in their journey, they became carbon neutral way back, I think around in 2012, 2013. The organization, they had become carbon neutral by purchasing offsets. Right now they have taken a lot of initiatives. Even there are a lot of initiatives with respect to collaborating with the suppliers to be able to guide the suppliers and to be able to collaborate with them so that they can reduce their emissions. They have very strict standards when it comes to supplier selection as well. And that's how you get onboarded on Microsoft's supplier portal, after you are able to qualify with a certain set of ESG initiatives that you have taken. And that's how I think the push has to be. That's how I think the push has to be on all the other industries, that via, and this is how SBTi even thinks, that not every organization will be able to come ahead and register, but however, there can be a push, from the large organizations. They can push their value chain, partners to be able to come on board and register on SBTi, commit, so that by them being able to reduce their emissions, an organization will be able to reduce and set their targets right. So that's how an organization's journey is. No, bit difficult, but then a lot of them, at least 127 out of the Indian companies, as I mentioned, they have their targets registered on the SBTi portal. So I think with this, I had this much for you today. Happy to walk through any of the questions that you have right now.
Thank you, Shahana. Very insightful session and really, really enriching one. There are some few questions. How does SBTi differ from traditional sustainability goal setting?
So, in order to answer that, Manisha, the fact is that traditional goal setting was an exercise which was not science based. It was based on that I am running a business in a certain way. And in order to achieve my levers, and in order to just be there, let me take a target somehow. That was the traditional approach which organizations used to take way back 2010, 2015. But with the onset of SBTi, it said that the world, at a level, has to reduce their emissions to 1.5 degrees Celsius. Sorry, the temperature has to be at 1.5 degrees Celsius. For that, every sector has been given a target. That's why there is a sector specific target. And if you are setting up your emissions, it's said that by 2030, when you put your baseline, you will get a science based approach. That is, by 2030, this is the emission that you need to achieve in order for your organization to stay on that curve of 1.5 degrees Celsius. So that's essentially the difference in both of them.
Great. How do companies integrate SBTi tagging into their sustainability reports? Example, BRSR, ESG disclosures.
No, a very good question here, Manisha. So the fact is that SBTi essentially, once you set your targets, once it is validated by SBTi and it's there on the portal, you have to do an year-on-year reporting, on your journey. Now, BRSR is something, and a very good question. I would say, when I think a lot of you who are looking into the organization's ESG disclosures right now would be having that in mind. That does a BRSR suffice? The requirements of SBTi. The fact is, see, BRSR gives us a leeway that I can either do a consolidated boundary reporting or a standalone reporting, and it's more or less a form wherein not all the narratives of story does come along. So the idea is, and the way BRSR is structured, because of it, it's a bit being a regulated part. Not all organizations have matured to report on all the indicators, at a consolidated level in BRSR. Organizations, they generally select a standalone way to go ahead and report. So therefore, it's always recommended that you come up with an ESG report, which is, based on certain standards, say a GRI standard, and report, because the ESG report allows you to also narrate your story. It's not just a form, but it's kind of a narrative or a storybook wherein the organization's journey or the story is also being published. So do prepare an ESG report and publish it on your website, wherein you mention your year on year action plans. Maybe it might be that, in some year you had to achieve a target of 20%, you achieved 18. But what has gone, to what are the efforts that has gone in terms of achieving that 18%, and why you couldn't achieve your full target figure is also something which can be narrated in the story.
Truly said, very correctly said. What is some sector specific challenges in implementing SBTi, for example, in manufacturing versus services?
So, see, in terms of, I would say for a manufacturing industry, there has to be a complete turnaround. For example, if you are dependent on, say, utility, power, and you have like every manufacturing company. For example, if I am in a aluminum manufacturing company, say, there will be a captive power plant to support me, and all the captive power plants right now, most of them, they are, thermal power plants.
Yes.
In order to abate that, there has to be a full technology change. That's why India as a nation has taken a target of 2070. You may be changing to green hydrogen. Does the organization have the revenue, or do they have that kind of a cash flows that they can invest into? Do they have the investors for completely doing that transition? Are they going to put the plant on hold? How is it that they are going to achieve? So therefore, SBTi is something, as I mentioned, for the manufacturing sector, something which has to be driven from the top. Vis-a-vis, for a services sector that you mentioned, it's a bit easier to achieve your scope 1 and scope 2 emissions, and to reduce it for a services perspective, because it's mostly centered to, your data centers, your scope 1 emission, your scope 2. You move your, you can abate easily from using diesel. You can place more emphasis on electricity, and you can buy RECs to kind of, neutralize your one or two. But however, for a services sector, even scope 3, which is their value chain, again, it's quite tricky as a process. That is also a difficult way for them to achieve their scope 3 emission reduction. So that's how, it goes sector to sector. There's a lot of difference.
Definitely, there's lot of difference in the manufacturing as well as the other services sector.
Yeah.
So, what role does internal governance, example, board oversight, ESG committees, play in ensuring progress on SBTi and GHG mitigation?
Okay, so see, when it comes to something which my peers or my corporate people, and even I, when I was there at the corporate front, something which we used to struggle with was basically to ESG is mostly looked at, if you see even now, that it's a ESG person's agenda in the organization. It's my KPI if I'm in the ESG domain. However, this is something which has to be, although the ESG person will be looking into enabling this function, but it is something which has to be owned by the at the CXO's level, and and being driven. Because till the time they don't, it's not driven, it's not something which has a focus from the top, doesn't get driven. We have seen a very good, or few very good success stories, for example, of working in some of the sectors, say in the hospitality sector right now is really picking up. This is a major challenge for them. Their investors and everybody else is pushing nudging them to be able to come up with those credible data. And even customers are wanting to go to a hotel which has subscribed to not science based target, but they want to see that, okay, if I'm investing and staying a night, how much water is getting saved, or so what are the
Definitely.
emissions. Yeah, so these are certain things which are being driven, and the corporate board, or the CXOs, they are the drivers of this agenda. The more this is getting considered in the reviews, the more actions you see on field, on ground.
I think so. It should be all financially connected, Everything which is
Correct.
financially connected gets more.
Absolutely, absolutely.
So, how do you ensure consistency between your inventory boundary and SBTi target boundary?
So again, a very something which is again very interesting, and that's where I always mention that this sector, the financial people, they can really make a difference, and they do make a difference. For example, I am from the environmental science background. I can suggest certain activities on decarbonization, but however, it's more better when the financial people have an eye to it, because when you do a stat audit, or when you look into boundary consolidation, it's absolutely proper. Why? Because it is something which has been adopted since ages. Non-financial reporting people used to have this leeway that, okay, these are two three subsidiaries which may not be performing very well, let me not report on these three, evade these, and then report on the others. But now, when financial people, they have taken an ownership on ESG along with the environment or the social sector, I see this convergence happening, across industries, wherein even the ESG people, for example, right now, if you ask me the difference between a standalone, consolidated, and if you ask me the materiality of it, even I would be able to, speak up on that. And it's a beauty, that I see, that how the space has been evolving. Even corporates are appreciating these efforts, that people on the financial and non-financial, they're working together to make this happen. And that's how you make, you as an organization, we always suggest that you make your non-financial boundary also consistent with your financial boundary. Don't say we will remove these three, or these JVs or these associates, and we look at them some 5 years down the line later once they mature. That's never going to happen. At least start reporting on it, have that consistency, because SBTi wants a consolidated boundary. SBTi doesn't say that you can do away with certain exclusions. You can do away, but if materially it's less, you can do away with it. But if it is more than 5%, of the emissions, you do have to consider it in the target boundary and go ahead. That's how the consistency lies in non-financial reporting as well.
Our
Hope I've
SRSB
been
team
able
is
to
also
answer.
working on this thing, the collaboration
Yes.
of yours and the CAs and all working in this areas. So it'll benefit both
Mm.
of us.
Yes, yes.
Carbon offsets are achieved through trees growing, forests growing, or any technical equipment. New technologies are emerged.
See, carbon offsets, generally, we, by way of nature, we consider that, if we invest into forests, or if there are, because a tree, when you grow a sapling, it immediately will not start doing carbon capture. It has to, reach a certain stage, a certain age, wherein there is a girth, there in the stem. The leaves have attained a certain age. Only after that the tree will start, doing a carbon capture, and also the amount is small. However, in the long run, the benefits are huge. So one is tree, one, as I mentioned, is also landfills. One is solar, one is renewables. There are a lot of these projects. Another one is not a carbon offset, but however, a lot is happening. For example, the cement sector right now, they are working a lot on the carbon capture. It's also happening by being done by some of the Indian companies, one of the largest Indian companies here in India. They're investing in terms of doing a carbon capture. That is, they capture the carbon dioxide, turn it into calcium carbonate, and then utilize it. So that's also something. But however, the only thing is that carbon dioxide being there in the atmosphere, it's the aging of that carbon dioxide, it's quite huge, it stays for long duration. But however, from a density perspective, it's not that dense. Even if you look at the percentage, it's not that dense. Therefore, capturing that via that air capture is something which is very difficult. A lot
Yes.
of that research is happening, right now, and something might come up.
So, what are the major risks due to global warming up and its impact, especially on net zero emission countries like very small countries? To give an example, our Asia continent, huge manufacturing giant China versus countries like Bhutan.
So, one thing which, when you say what is happening due to climate change, and as I mentioned initially, the Earth getting heated up. The Earth is heating up, and because of that heating up, recently, in fact, yesterday there was a news in Hindu. I don't know if some of you have seen, the Ganga basin is seeing the highest drought which it has not seen in the past 30 to 40 years. In last 3 to 4 years, that has seen one of the highest drought that entire basin. Because of, so one side it is a drought. Now because of, you may have heard that Indonesia is shifting its capital altogether because of Jakarta. Because of that going underwater, the sea level is rising, and it's
Yes.
quite evident. IPCC reports, the recent reports which comes up, and it's a very interesting read. They mention that by 2050, between 2030 to 2050, I think that has now shifted again back to 2025, and this year also we are seeing a lot of these disasters happening. We have seen what has happened in Dharali, in Uttarakhand. Although these were evident, it's not that it was not happening before, but right now the frequency of those events have quite increased. This year it's there that this year the winters are going to be very extreme, severely extreme, due to the La Nina effect, and impact. So everywhere you see that it's creating certain impact in the throughout. Because of those impacts, the organization supplies, for example, if you are bringing supply from somewhere, it gets impacted. Nowhere, in the past 10 years, if you look at, you would have seen a flooding in Kolkata, say, in the month of July or in August. But right now, it happened 2 3 days back
Yes,
in
yes,
Kolkata
definitely.
in
It happened two,
September.
3 days back. Yeah.
Yeah, so the monsoons are shifting, the patterns are shifting, and nobody is ready to kind of, with that kind of a pattern, with that kind of an infrastructure, which is alarming, which will impact, some things here and there.
So, very rightful question. CA role for the work with respect to SBTi and gas mitigation.
So, when it comes to SBTi mitigation, when you mention, uh, see, one role is you will need these environmental scientists, there with you. You will need the social people to be there with you. But in order to have that governance set, in order, it is important to have these, have the chartered accountants in place, and they should be the one who would be the torch bearers of, how you look at financial numbers. Similarly, you will have to also look at the non-financial numbers, because you are the ones who are, who are the torch bearers of those targets. Like how it should be a part of the CXO's agenda, as I say. And when I say CXO's agenda, mostly the CEO and the CFO's agenda, should be towards achieving that, because the revenues will come up from the CFO's desk.
Definitely.
Those will be signed. So these are, certain things which they, and also we spoke about assurance, right? Environment people, social people, they'll report the data, but how correct is the data? What are the sources, what are the controls and governance there in places? These are some of the places wherein a CA would be required to set systems in order.
Truly said. So, lots of questions. I'll just keep on going. It's like
Yeah,
buzzing.
yeah, sure, sure.
Un- Unorganized sector, what is the scope for reduction?
See, for the, this is again a very common question which comes up, because SEBI came up with this value chain reporting. Right now, that has become, voluntary, and it is not mandatory. But a lot of these sectors, for example, who are there into companies, who are there into consumer goods kind of a business, wherein they are mostly dependent on these unorganized sectors. The idea is that, how do they get them on board? So the idea is that for the unorganized sector, it's very important that a kind of an assessment gets done by the corporate, because they have that ability to conduct that assessment. Obviously, you do corporates, they invest and they put a lot of efforts when it comes to the quality of the material that they are bringing from these unorganized sector. So why not also assist them and do a hand holding and engage with them in terms of ESG as well? It's difficult right now, but then there are some sectors who are really working well with these unorganized sectors. If it when it comes to farms, when it comes to certain businesses, they are really doing well. And they're trying to kind of work with these aggregators to even bring these unorganized sectors on board, to be able to also work with them towards a certain assignment, obviously not one, but at least one at a time.
10 to 1.5 degrees, no, sorry, 0 to 1.5 degrees warming up limit is for each year. And what is base global warming up level?
See, when we say 1.5 degrees Celsius, it's from the pre-industrial levels. We say that measurement is from the pre-industrial levels. That how is it that the temperature has been rising? Currently, if you say, I mean, a couple of years, temperature has increased to 1 degree. Now, when we say 1 degree, and how do we relate it? We relate it based on how much the capture, or we calculate that in terms of the sun's radiation, which is in terms of watt per meter square. How much of watt per meter square the radiation has been, which is leading to when it falls on certain surface, which is leading to an increase in the temperature. So the limit has to be 1.5 degrees Celsius. But however, as we see right now, with the efforts that we are doing, we are very close to somewhere around 2.5 degrees Celsius, very close.
Oh my God. So, indeed, it is necessary to deliberate on SBTi. However, what about ever increasing emission of CFC from use by larger and larger sections of population across the length and breadth of India, matching with rising GDP growth? There is contradiction in thought even among the educated class of India. Classroom debates is not going to help us meeting the objectives set at Paris Agreement. General public awareness, particularly among solvent educated class, is more important in my humble opinion.
No, so very true, and I think I can clearly understand where these sentiments are coming from. In fact, in my tenure, when I began with doing assurance, certain things which the industries used to exclude from their emission inventory or boundary was the refrigerants, and the CFCs, to begin with. Although it's being abated a lot, CFCs have mostly been abated, especially in a country like India. And there are other options which have come up, which is called as an HCFC. Although that is also, that also does cause greenhouse gas emissions, but not that potent. Organizations now are there are a lot of variations available. The old machines which are there, they still use certain refrigerants or gases which are quite potent when it comes to greenhouse gases, because maximum greenhouse gas emissions, Manisha, comes from the refrigerants. The potential, the quantity might be less, but the global warming potential is quite high, for these refrigerants, 10x higher, I would say. That's how the potential is. Thankfully, based on the national agenda and the international agenda, there are a lot of variants which have come in the market. The only challenge is that right now the infrastructure which is there for these systems, they are not that evolved. In order to change that infrastructure, you'll have to remove certain things, which doesn't seem too feasible. But by 2030 onwards, we will see a lot of change happening, in that as well. Companies who are into working in the air conditioning part, even they are coming up with a lot of options. There are certain options which globally has been adopted due to certain cost factors not being adopted here in India. But then there are certain global giants and companies who are looking forward to replacing these machines now onwards. Year on year, they have set targets for replacement. So that's happening.
I'm sure a lot of awareness has come up both ways.
Yes, yes.
How can digital tools, data analytics, carbon accounting software strengthen SBTi tagging and emissions tagging?
So see, with the we are fortunate enough because of the advent of AI. It's the amount of manual errors which would happen for these for certain softwares, because of the softwares also being evolved and attached with the organization's ERP system. If the software is that capable enough that also even if not ERPs, if the softwares are able to, if the digital tool, two ways one corporate can look at it. One is if your tool is enabled enough and linked to the ERP system, one way to look at it. Second is if you are able to submit certain documents within the tool, through which an assurance provider or through which someone sitting in the corporate will be able to validate or do a quarterly monitoring of the data. I mean, it's much more easier, because then at the end of the year you don't come up with surprises that, oh, my emission has increased, whether and vis-a-vis something had to decrease. So something doesn't go as a surprise to the CXO, and there is a quarterly monitoring. So these are the tool which are now enablers, because the monitoring has to be proper in order to also achieve and see the results. So these are the tools, and now there are a lot of tools out there in the market. Corporates should go ahead and implement these tools to be able to enable and achieve their targets on SBTi.
Yes, there are many tools available, agreed. So how can organizations integrate SBTi targets with financial planning and capex disem?
So, see, this is again a very, very good question, because while setting up the SBTi targets, based on the SBTi tools, one thing which organizations they miss, they set the targets, whereas they don't set the actions right. And when I say that they don't set the actions right, they might look into certain actions, but then they don't look at the cost of it. See, certain technologies are right now out there in the market, and the price and everything is out there. So why not do a complete evaluation of identifying that what is going to be my capex, what is going to be my opex, what is the what is the asset depreciation value which is existing currently. Put all that into the picture and come out with a return on investment as well, that if I'm putting up this infrastructure, what is the return on investment? Is it 2 to 3 years? If it is 2 to 3 years, it's absolutely efficient, let's go for it. So what is the so how is it going to impact my profits? If that kind of an analysis is being done, and that's where even a chartered accountants, they come into play, wherein they can do this, they can work around this along with the environment person, wherein the environment or the chemical engineer, these engineers or scientists, they give these data, they suggest technologies. The chartered accountants, they work around on the cost, and that's how we work on decarbonization projects and present it to the management. At least 5 years plan has to be there in place for you to be able to achieve it.
Oh, yes, that has to be there. It has to be both ways. We have
Correct.
to take your views and then represent it to the
Correct.
management.
It's not just a target submission to SBTi, but it has to be both ways.
Yes. How can organization integrate SBTi? This is again another question which has come up.
Yeah. See, integration of when you say integrate SBTi, it is basically integration within your target journey. It can't be, I will achieve. See, you will see some organizations coming up with a broad ESG strategy wherein they mention, I will achieve 35% of my targets by 2030. Absolutely wonderful. Do achieve 35%. How is that 35%? How have you broken it down into various departments? Do the departments have those KPIs? Does your operations team have a KPI of that 35% being divided, that you have 10 sites? Which site is going to contribute to how much percentage? So it should not be a top driven agenda. Top has given you that agenda of 35%. Now it has to be bottom driven to be able to identify that how this corroborates with the 35. Is it 35 which if they be able to do by 2030, or is it 40? Do that assessment properly.
I think so. People are again and again asking the same question because they're more interested in it, the integration part. So, is there any Is there any company in India who have sought the assistance, guidance of Worldwide Fund for Nature?
So, see, Worldwide Fund for Nature is something which is again a part of SBTi only. SBTi does validation work on the targets. Worldwide Fund for Nature, they are also a part of this collaboration, this initiative of developing, because the way IPCC is also channeling its efforts into developing that what is IPCC develops these scenarios. If there is a 1.5 degree Celsius change, what is going to be the current climate scenario, which regions are going to experience floods, and SBTi gets aligned with IPCC. So that's also the work of the WWF, Worldwide Fund for Nature, to be able to kind of align with SBTi and come across with those targets.
So, some startup on carbon capture technology, how to encourage?
See, the way to encourage is first of all to also, in terms of the carbon capture technology, it's also important to see that uh, how efficient, anybody and everybody can come today on a carbon capture part. It's important to understand what is the idea. First, and then accordingly, do these fundings. In fact, there are financial institutions that they are even getting these targets of funding such agencies or such startups on who are working on carbon capture. Organizations have green bonds. Organization have these credits in place wherein they want to invest into such startups. The idea is for them also, for these startup agencies to also look into that, who has a green bond and who has committed towards carbon capture. For example, so one of the largest, as I mentioned, cement company, they have collaborated with a startup to work on carbon capture. So that's how it happens. You'll have to reach out, to the right people, to the sustainability personnel, because anybody and everybody who has subscribed to a green bond or a blue bond, they are heavily investing into these organizations to be able to come up with a solution.
That's the number of questions, we've also been working, and we also see like the management is not that out of all the list in the board meetings, they'll be having this ESG and sustainability at the last point. I know this CSOs have to work a lot for it, and we try to portray those things in financial figures and show them a sustainalytics for 5 years. So I think so that helps them which to achieve that.
True, and
So
I see a lot of transition happening in last 2 3 years. I mean, a lot has happened in this
yes,
space,
yes, I
and
agree
we
to
are
that.
very fortunate as a company because of BRSR and SEBI, making all of those efforts, and you all as standard setters putting those standards into place. That even the assurance standards are set right,
Yeah.
now. So I think slowly and steadily we are making good progress.
Yes. Great. Thank you, Shana, for such an insightful session. Over to you, Heth, please, for a vote of thanks.
Pleasure
Uh,
is all mine. Thank you.
yeah, thank you, Manisha, for giving me this opportunity to present the vote of thanks. Good afternoon, everyone. On behalf of Sustainability Reporting Standards Board of I extend my sincere gratitude to each of you for joining us today for this enlightening webinar on SBTi tagging and GHG mitigation. Your participation has been instrumental in making today's session a success. A heartfelt thanks to our esteemed speaker Suhana Muzamdar for sharing her deep expertise and perspective on SBTi tagging and GHG mitigation. Her presentation provided us with a clearer understanding of how SBTi tagging helps organizations set measurable, science aligned goals and track their progress towards a low carbon future. The insight of GHG mitigation examples ranging from energy efficiency improvement to value chain decarbonization and carbon removals highlighted actionable strategies for achieving measurable impact on science-based targets, pathway to reducing greenhouse gas emissions, and the importance of sustainability in organizational strategies. The discussions this afternoon suggested insightful perspective that SBTi tagging and robust GHG mitigations are not only compliance exercises but are strategic tools to drive innovation, operational efficiencies, and sustainable growth. Special thanks to our participation whose engagement and thoughtful questions and enriched today's discussion. truly turning this into a collaborative learning experience. We invite all participants to join us for our upcoming webinar scheduled for Friday 12 p.m. to 2 p.m., where we will continue to exploring crucial topics in sustainability reporting and best practices. Your dedication to advancing sustainability practices is invaluable, and we look forward to your continued involvement in our ongoing initiatives as we collectively pave the way towards a more sustainable and resilient future. Thank you.
Thank you so much, Hey. Thank you, Shahana. Thank you, SRSB team. Thank you so much.
Welcome. Pleasure is all mine.
Thank you so much, ma'am. Tech support, go offline.